SuperMicro Computer and Vertiv Holdings are serving the insatiable demand from enterprises to build data centers optimized for artificial intelligence. But which one of these two is the better AI stock to buy for long-term investors? I'll answer that question in this video, comparing these two AI companies across several important financial categories, including revenue growth, returns on investor capital, operating cash flow to sales, forward price to earnings ratio to get a look at valuation, and then I'll share with you my proprietary discounted cash flow valuation to get another insight into whether these stocks, which one is better valued. I'll do all of that and then let you know my answer for which one I like better at current market prices.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So revenue growth has been excellent for SuperMicro Computer and Vertiv since 2020. However, SuperMicro Computer has demonstrated significantly better revenue growth going all the way back to 2016. If we look at the compounded annual revenue growth rates, SuperMicro Computer has delivered 31.7% compounded annual growth between 2016 and the most recent update, and Vertiv has delivered 11.3% in that time. Still very good, but when compared to SuperMicro Computer, it pales in comparison. It's only a fraction of the revenue growth that SuperMicro has generated in that time. Now, looking at returns on investor capital, again, SuperMicro Computer, I would say, holds the advantage, even though the trend line has been worsening for SuperMicro Computer. As the company is working to gain market share, it's been very competitive in its pricing, and management has discussed that they want to capitalize on the opportunity. They want to take that market share now, and they're okay with losing out on some margin in order to gain market share, but they're still ahead of VRT, Vertiv, at 18.2% in the most recent trailing 12-month period, compared to 14.9% for Vertiv. Now, if we take the average, then SuperMicro Computer much better than Vertiv. If we look at the trend, Vertiv much better than SuperMicro Computer. So I'm getting mixed results when looking at the return on investor capital comparison, but I would give the edge to SuperMicro Computer on this metric. And so now on revenue and on return on investor capital, I would give SuperMicro Computer the edge. And then when we measure the operating cash flow to sales, Vertiv has the edge in this metric. At 17.7%, it's improved very nicely over the previous decade, while SuperMicro Computer has been volatile and has not shown very much improvement during that time. Again, SuperMicro Computer reported negative cash flow from operations for a couple of quarters, because when you're a company that sells hardware and you're growing revenue very quickly, and revenue growth is accelerating, you're in a position where cash flow can turn negative. Because if the person that's buying your product has more negotiating power against you than you have against your suppliers, then that buyer of your product can ask for 60 or 90 days to pay you for the product you deliver. Meanwhile, your suppliers may ask you to pay them in 30 days, and you're unable to negotiate an extended payback with your suppliers. And so you're caught in this inventory cycle where you're holding on to that inventory, and then it turns into an account receivable rather than an actual cash payment. And so your cash flow turns negative. But if your business is going to have negative cash flow, you'd like it to be for this reason, right? Your business is growing so fast that there's just a cash flow mismatch between when you're paying for inventory and when you're getting paid for the inventory, because sales are growing so fast. That's the kind of problem you'd like to have in a business, and that's precisely the kind of problem that SuperMicro Computer has right now. But what makes that situation a little more risky, is because of the question marks around SuperMicro's financial statements and the accuracy of those financial statements after its auditor resigned and made a statement upon resignation that they didn't believe management was transparent with them in providing information for them to audit the financial statements. And so there's been a lot of question marks, and that's just one piece of news surrounding that whole saga that Supermicro Computer has been going through since the middle of last year surrounding its financial statements. So it's facing an elevated level of risk and skepticism from stock market investor as a result of those question marks about its financial statements. So I'm getting all these charts that you're looking at from finchat.io, and there's a link in the description if you're interested in doing this kind of analysis using their data to make this kind of analysis. But what I'm looking at here now is valuation, and I'm looking at the forward price to earnings ratio. And Vertiv is more expensive than Supermicro. In fact, almost double the value of Supermicro. It's trading at a forward PE of 27, whereas Supermicro is trading at a forward PE of 15.7. So it's about half the valuation of Vertiv. And I would say the primary reason for that is the question marks surrounding the accuracy of the financial statements, and then the question marks surrounding the management team. So those are the big downsides for Supermicro right now as is viewed by stock market investors. My proprietary discounted cash flow valuations, Vertiv looks overvalued at the current market price of $104. My intrinsic value calculation has the business worth $78 a share. And Supermicro looks undervalued according to my discounted cash flow valuation. Current market price at $40 is $17 less than my intrinsic value calculation of $57.23. So, acknowledging the fact that Supermicro's stock comes with elevated risk, but accounting for that fact, the valuation is so much cheaper than Vertiv and its revenue growth is much better than Vertiv. If I had to pick between these two stocks to buy today, I would pick Supermicro as the better AI stock to buy.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.